Most certainly, but I have been around the block a few times, the track a few times. And whenever things have gone this well for me, usually there's a correction around the bend. And I want to gird for it and protect it, and also prepare our investors for the possibility and say, just keep some powder dry, because what we're looking at here are long-term, again, exponential growth trajectories that they're not going to be stopped. You can't stop progress. And today, when the government tries to stop progress, well, it usually fails. And so even if we go through a correction, and I expect one, we must almost always expect corrections. I just have to keep my eye on the prize. But I do want to warn investors that, you know, in the investment world, it's not just straight up and to the right. You know, we will have those corrections. So again, we just keep our eye on the prize. We have a 5-year time horizon. We are fully invested at all times, which is what we are supposed to be. But that doesn't mean that investors shouldn't, you know, sometimes take a bit of money off the table and keep some powder dry. Well, one bad year would not worry us at all. Our investment time horizon is 5 years, and we have projections which we develop from the top down, trying to understand how technologies are going to scale, and from the bottom up, how companies are going to embrace these new technologies and ride their coattails. And just looking at the portfolios today, this is after the triple-digit gain, as you have said. For the next 5 years, we believe that our returns will compound at an annual rate of something in the low 20% range. And this is in a market where traditional equity returns have been in the 7 to 8% range over time. So we still think there's a lot of room or runway ahead, because what we think is not well understood is exponential growth. I think if we step back and look at Amazon in the early 2000s, I remember buying that stock, and many people derided that decision because the thought process back then is in the tech and telecom bust, which is, you know, the internet is a figment of Wall Street's imagination. What makes you think Amazon's ever going to make any money? And if you did at that time assume that Amazon's revenue growth would compound at a 20 to 30% rate for the next 20 years, you would have bought that stock all day long, even if you were using a dividend discount model, right? I feel like our portfolios are filled with Amazons because the seeds for what we are doing now, they were planted in the tech and telecom bubble, and they have been gestating all this time, and now they're breaking out to those growth trends, just like Amazon did. Tesla's still in the running, but I would have to say, the biggest upside surprises are going to come from the genomic space. And that's because the convergence of DNA sequencing, artificial intelligence, and gene therapies, importantly CRISPR gene editing, are going to cure disease. That convergence is going to cure disease. Now we have real science and technology surfacing the mutations in our genomic profile. And as they surface those mutations, what do we see? We see the earliest manifestations of disease. Yes, well, we put it in at a 1% position in 2015 when Bitcoin was $250. And we scaled with it. We didn't sell it at all. So it hit 10% of the portfolio, at which point we were forced to sell. And at the same time, there was some forking taking place. So we were getting distributions. And what we learned is that Bitcoin threw off what's called unqualified income, which is not illegal, but from an IRS point of view, to subject our investors to. So what we did is we moved out of it in early 18, better lucky than smart, because of course we went from $20,000 down to at the end of 17 down to below 4,000 earlier this year. In our fully discretionary portfolios, where we are not subjected to the 40 Act rules of the SEC, our Bitcoin position is about 7% right now. So that is how optimistic we are on it. We are extremely bullish. Our confidence in it has gone up since 2017, because what we saw as it dropped from 20,000 to below 4,000, it actually got well into the threes, I think in 2019, was that Bitcoin's share of the crypto asset ecosystem moved from the low 30% range in terms of value, network values, into the low 70% range. And what did that tell us? That confirmed in our mind that Bitcoin is the reserve currency of the crypto asset ecosystem. So it is the reserve cryptocurrency, which is a very important role. It's the flight to safety currency. It is Bitcoin's technology, or Bitcoin's blockchain, is the most secure of any other blockchain. And so it makes sense that Bitcoin would be the reserve currency of the crypto asset ecosystem. Our marketing department used to send me anything that I needed to respond to, but no, we were standing up for what we thought was right. And we also were astonished that at the backlash. And I think part of it was Elon's personality and the way and the things he was saying on Twitter. He's a provocative soul, and he's brilliant. He's our Renaissance man, and all we did, which is what we should have done in terms of our research, is keep our eye on the prize. And the prize had to do with the autonomous taxi network that we believe Tesla will be in the pole position to dominate, mostly because of its advantages in artificial intelligence and the amount of data it has collected and the AI expertise that it has. And we couldn't believe that no one wanted to listen to this, that they really just made fun of it. And it made me feel even more strongly about Tesla, because what we saw happen over time as the naysayers were growing was their barriers to entry, or Tesla's barriers to entry, were increasing. Their battery technology was already 3 years, now it's maybe 4 years ahead of the competition, especially now that they're going to build the battery into the structure of the car.